So having these roadmaps, these big picture roadmaps that cover not just a few months, but several years, really does help to put your trading and your investing into sharper focus. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome everybody to Talking Trades. Kevin Wadsworth and myself, Patrick Karim. And today we're going to be covering a very important subject, the need for roadmaps. Do you have a clear pathway of what is more probable and least probable over the next year, 5 years or 10 years? Well, if you can't visualize it on a chart, then you might be flying blind. All right, Kev, can you show us?
I'll do my best, Pat. Okay, guys, what I'm about to show you here is pretty important, I would suggest, for every sort of trader and investor out there. And I don't think it's really considered often enough by people. And what I'm talking about is having a roadmap. Now, I've just shared my screen there. So this is taken from our website there at northstarbadcharts.com. And we've got a series of roadmap charts. And what do I mean by roadmaps? What I mean is, if you're trading or investing over a period of time, you really want to have a broad overview of what your expectations are for that sector or that stock, whether it's cryptocurrencies or whether it's precious metals or whatever it happens to be. So it's going to really be useful if you are able to create a roadmap that gives you a guide for the coming, not just days, weeks and months, but for the coming years. So I'm going to take you into the roadmaps for precious metals that we've created. And these roadmaps have been designed to give a bird's eye view of what the overall expectations are for, in this case, gold and silver. So the previous five-year roadmap that we had expired really when we hit the $2,700 level. We put out a roadmap chart back in 2019, 2020, and that projected forwards 5 years to where we are now. And we've achieved the roadmap aims of that particular forecast. So this is the new gold 5-year roadmap, and it's based on a broad range of techniques to deduce the most likely outcome for gold. Okay, so how have we done that? How have I done that? And this is really to sort of explain what we think is most likely and why it's important. So I think you can see the cup and handle pattern in this chart, the 8-year cycle low there in the middle of the cup portion, and then the sort of the arc pattern, the cup pattern, took gold up to around the 2000 level, and we've built a 3-year handle onto that and broken out of that. And that breakout was the key piece of evidence that we were likely to move to somewhere between $2,700 and $2,800. Now, there are a number of reasons why we're encountering resistance in the $2,700 area. Well, you can see one of them quite clearly on the chart. It's a 44-year resistance line, and it was really just a little bit of I won't say guesswork, but you put these lines on the chart sometimes before they become particularly relevant, because you need 3 touches on a line to turn it into an active support or resistance line. You can join any 2 points with a straight line, so you need a third touch to make it relevant for terms of support and resistance. So we've got that third touch now, and it looks as though we're going to get a stall at around about this $2,700 area on the monthly close. And that's relevant because it confirms that line that's drawn on the chart, not arbitrarily, but it's kind of just joining 2 points together. It's now joining a third point. So that becomes a relevant resistance level. So what that tells us is that if and when we break out above that resistance level, something really important is happening, because it's a line that goes back 44 years. So there is a Fibonacci extension level, there's a measured move, there's a whole range of techniques, including distance from moving average, that pointed to that $2,700, $2,800 level. So a pause of some sort is likely here, whether it's a small pause or a large one that takes us all the way back down to to test support somewhere just above $2,000, that remains to be seen and depends to a large extent on when the stock market rolls over. A stock market rollover is highly likely in the coming weeks or small number of months, probably, of the order of, a few weeks to, 2 or 3 months, something like that. That seems a likely time frame. Now, you can't front run that. There's no point front running that. I mean, the stock market could carry on going up for the next 5 years. That's not impossible, but I'm just talking about what the probabilities are pointing to. Okay, so can't front run it. The stock market remains in a bull market until it isn't. But having said all of that, if the stock market rolls over soon, then we are likely to come down to somewhere just above $2,000 or maybe 2,300, that kind of area, with a larger pullback. If not, then gold can possibly push a little bit higher and push towards 3,000 or a little bit more before retesting that line as a support level, coming back to test it as support when the stock market has a particularly weak period. And then there's a whole lot of other evidence that we've put together that suggests that we would then be entering a long, strong bull market era where the gold price doubles and then doubles again. And we've previously explained why we believe that to be the case in previous episodes of Talking Trades, of course. Now, you can do the same thing with silver. And this silver cup pattern that you can see on the chart here is actually part of I think it's a 40-year cup and handle, actually. It goes all the way back to 1980. And this is just the handle portion of it. It's a multi-decade cup, as you can see on the label there. And then we've got this handle that's formed on it, which is actually another cup pattern. Point is, this is a roadmap that we put out back here when we had the COVID low, and it became clear that this arc pattern was forming. And by doing that, we were able to manage our expectations. When we had this big move up for silver, the expectation was that at some point, the edge of this arc would be tested again. And much to everyone's disappointment and surprise, that's kind of what's happened. And we've had another touch point here, another touch point here. And it's possible we could get another touch point any point between here and when we hit the target. So this target area is critical. And what happens in this target area is really important because the breakout above that target area would be highly, highly significant, of course. And everybody in the market is waiting for that. But it may not happen for quite some time to come yet. Silver hasn't really outperformed gold yet so far in the bull market. It will have its time, I'm fairly sure of that, but until the gold-silver ratio breaks down, then again, there's no point front-running this, okay? The platinum roadmap is something that we've used for our members to steer our members well away from platinum. A lot of chatter around platinum, but it's gone precisely nowhere for about a decade, and until it breaks out, and more particularly until it starts outperforming gold and silver, then there's no point in touching it. And the key to the precious metals bull era is the gold to SPX ratio, of course. I just want to finish with one final chart, and that's this one here. So here we are with the GDX to gold chart. And why on earth would you be worrying about precious metals miners if they have not yet broken out versus gold? So this is a chart that we've shown our website members over the last couple of years. And until this chart breaks out, you are pretty much wasting your time with precious metals miners as a whole. There will be obviously some outperformers in the sector, but GDX as a whole, the gold miners as a whole, are not outperforming gold. So this recent move from $2,000 to $2,700 would have been best played using gold itself. Until the miners break out, you do not need to be distracted by precious metals miners. And as exciting as it might have seemed for the move up, it was matched by gold itself. So gold equal the performance of the precious metals miners. Until we really start to break out, until we get above that solid black line, there is really not much point in playing the precious metals miners. Gold is doing perfectly well. Once you cross that line, and certainly when you cross the red line, that's when the miners are really outpacing gold. So having these roadmaps, these big picture roadmaps that cover not just a few months, but several years, really does help to put your trading and your investing into sharper focus. Okay, that's my piece for today, Pat.
That's brilliant stuff. And guys, just follow the charts, be objective and unbiased. Thanks for watching Talking Trades. Make sure to subscribe and like, and let us know for more content like this. Thanks.